the ones that are doing well, the ones that are continuing to get investor interest and scale, are the ones that had the unit economics fundamentals correct from the start.
People walked away from $50 million transactions because they themselves or the board or whatever felt like they could go much higher, much faster. And unfortunately, almost all the stories I know of that where they walked away, they ran out of runway.
With AI, it is actually less important where you are if you're building really well. So you can build global businesses theoretically.
I think their proximity in Southeast Asia has, for the first time in a long time, became an asset, not a liability. And in AI, moat building conceptually is you build that moat really fast, but you lose it really fast as well if you're doing something global and generic. The big loss is the fact that people are starting to give up on Southeast Asia. The region still has a lot of potential.
Hi everyone, welcome to the 6th episode of The Accidental VC, where we cover different topics around venture capital and startups, especially from folks' perspective who have accidentally tapped into the industry of venture capital, as is the case here, I think, also with us to some extent.
Yeah.
Today I have Mohan and Jeremy with me, and Mohan, Jeremy, and I have actually run a fund for the last 3 years. So up front, there'll be a lot of insider things here between us. I'm pretty excited to have you both here. 3 years, yeah?
This is the 4th year already. Wow.
Yeah, time flies.
Yeah.
Time flies.
So we're here to party and talk about Southeast Asia, venture capital, and technology. So let's get it rolling. So what do you think 2026 looks like? What's going on in Southeast Asia?
Oh, now I'm getting interviewed. That's nice. Well, I mean, we've kind of our business, as you know, has really pivoted from doing early stage investing as an angel club originally to now largely focusing on large cap US investments. So I suppose been a little bit out of the loop, other than the work we do together and some of the work we do with 1MX on AI. But one thing I noticed is that there is a sort of revival in a way that I see with interesting AI businesses coming out of the woodworks, and also sort of comparing how some businesses that have been using AI or have an AI element to their business model that we've invested in, for example, Staple and others, the differences between these businesses and also the valuation ranges. I'm starting to now see more companies coming back with those $15 million safe notes,
right.
which is interesting. And the question is, is that justified in a market like Southeast Asia? But then also, I mean, we in our recent investments, I think we still remain quite bullish, or I still remain quite bullish about sort of more physical world, real world applications that just seem to really make sense in Southeast Asia, where a lot of things still need to be built, just basic infrastructure things like getting food to your door and in more remote areas and those kind of things. So yeah, I think it remains an interesting market. What do you guys think?
Yeah. No, I mean, I'm still excited, and that also is the reason why Orwell started, right? Businesses that can demonstrate the right and decent unit economics in this kind of market. I think in 2022, when we hung out, we realized that the market like Southeast Asia is going to require businesses that have a good gross margin amount, because they cannot be over-reliant on venture capital for too long. And I think that story hasn't changed, right? If we even look at our Orwell portfolio now, the ones that are doing well, the ones that are continuing to get investor interest and scale, are the ones that had the unit economics fundamentals correct from the start. So for me, right, any company that I see that loses track of that at the early stages, I think it's still a no for me, right? But generally speaking,
even if it says AI in the name,
no, I mean, like it's a nice little a plug there. But I think we have to go back to what this region or the realities of this region, right? And that hasn't changed in the last 5 years.
Well, I think what's interesting in my head as well is, the magnitude of the problems that still exist. People still struggle with, having clean drinking water, safe food. And then it goes all the way to scale of being able to do marketing in English, to expand new markets, to be able to get products from point A to point B. So I think these problems are still sizable and still huge. I think it's just that the approach and the ROI timeline has shifted, I think, over the past, especially, I think, 5 years. So I would say 5 years ago, I think there's very much a thesis to say, let's go and say that these problems are still real, still large, and we're willing to burn a lot of cash with the assumption that somebody else will fund the next tranche of capital needed and basically blitzscale. But of course, I think we ended up in a situation where we saw a lot of negative blitzscaling, where you had negative unit economics, and you blitzscale it, which basically means that you burn money even faster.
Yeah.
And I think that has turned out to be way too fragile a business model. And I think the past 2 years has really been clearing that backlog out, right? Both in terms of companies that have to reset their approach or close down. I think founders had to reset their mindset as well. And also VC funds actually had to reset their mindset and approach and speak about this with their LPs. And so I think that's the tricky part that's there. And now I think we're starting to come to a new position for 2026, which is the problems still exist. They never went away. But now we have to be more thoughtful about our unit economics. And artificial intelligence could be one of the levers to bring the cost structure down sufficiently to make the unit economics work. Whereas historically, having 100 people fly in from Europe, from America, and Southeast Asia and Singapore to work on a problem in Indonesia doesn't really work anymore for the unit economics as well.
Yeah.
See, there are two big problems for Southeast Asia that are really against them, right? One is that there are big problems, but regionally, right, the market cannot sustain or pay for these problems. I mean, if we look at education, that's one good example, right? We've seen portfolio companies that look good on paper, but when you dig into the details, 80-90% of their revenue is funded by the government. And if the government takes away those incentives, then essentially the business collapses. We've seen businesses in, like, for example, Vietnam, where yes, the unit economics and the cost base is very, very low, but they are supporting a local market, and that market can't really pay very much as well. And that also collapses. Then the companies that do well are the ones that use the local cost base, but they target overseas companies. So in essence, they're not then solving the problems in Southeast Asia per se. So I think that and then AI companies, the ones that I speak to quite a bit now, if you ask them what is their perception of Southeast Asia, is that a market is interesting for them? The truth is it's not, because it's not a market that's known to be able to pay and is very forward. So I think as much as there are problems and opportunities, the unfortunate truth is that a lot of these problems and opportunities are not worth solving purely from a financial standpoint.
Oh, there's a lot to unpack there with all the things you mentioned. I mean, a couple of things, I guess, that we, for context, we started the fund together 3+ years ago. Sort of spun out of our relationship and angel investing together as investing with friends. And it's been super fun journey. Even now we're kind of heading into more harvesting period of our first fund. What do you think still holds true to our assumptions back then? And what has sort of materially changed, and how you would invest more from a angel investors lens, perhaps for starters, and we can talk also about what it means for founders. I think all of the factors you just described really deeply affect both the investors' mindset and the founders' mindset in how to build in Southeast Asia. And one thing that we talked about a lot was this factor of we don't want to build a power law based fund, right? And we don't believe that power law investing is a sustainable way of investing. We can sort of look at call a spade, but in Southeast Asia, unfortunately, they have actually, of course, there have been power law outcomes like Gojek, Grab, Tokopedia, etc., that have made some fund vintages extremely successful. But it's not been a sort of given across all the tier ones to be able to create power law outcomes and great DPI. And we build our fund on that thesis. And I sort of feel generally there was the right move, and we can see some of the fruits of that starting to develop. How do you think that has changed? And has that changed with the rise of AI and new technologies? And how do you think about this?
Yeah, I agree that right-sizing the check for capital has been helpful, because it's very much a decision by both the investors and the founders about what that monetary funding transaction at that point of time, what it represents, right? And I think for us, being able to say, hey, a $50 million outcome where there's an M&A outcome for the founder would be a tremendous outcome for both the founder, life-changing for their family and their employees, but also would be an incredible return for the fund and our LPs. And I think that has been proven to be true, that those transactions can happen.
We have one great example.
Exactly, right? And so those transactions can happen in Southeast Asia. And I think one thing that we have to say is we have to remind founders that they shouldn't look down on it. There's this weird position. I think for many people, were like, people walked away from $50 million transactions because themselves or the board or whatever felt like, they could go much higher, much higher, much faster. And unfortunately, almost all the stories I know of that where they walked away, they ran out of runway.
And then there's a zero.
Is zero, right? And so I think there's something for folks to be mindful of, is that an outcome is an outcome.
So I think the first caveat is that it's not that power law investing doesn't work. I think it is, the US is a great example of that working extremely well. The problem in Southeast Asia is that in the last 15 years, it has been blown out of proportion. And like every VC out there is purely looking for that $1 billion opportunity. And that leaves a very good base of founders and entrepreneurs that are building good companies that can probably get to the 20, 30, $50 million revenue level, but just don't have the VC capital to support them. And that's the gap we were trying to fulfill, right? So 3Cat is a great example, right? When we invested, the company was already doing a 7-figure revenue amount. I think EBITDA positive at that point.
Reasonable valuation.
The business has grown more than 10x in the last couple of years. And the valuation hasn't skyrocketed based on a typical power law venture model.
So do you think does that mean that a sort of more private equity or micro private equity style approach to venture capital is something that's important to consider in venture investing in Southeast Asia? And have you seen that also? You probably see more than me. Have you seen that also sort of flowing into fund strategies, into the tier ones here in the region?
So it's that there is an opportunity to invest in companies like that was just not tapped on because people were just blindsided by the Silicon Valley way of investing.
Needs to be a unicorn.
Yeah, and I think I even recall founders that we invested in when I asked them, why didn't your previous investor invest in you? And the entire answer is that, oh, this is not a $1 billion opportunity, which is a real waste because I think this region has a good potential to build a good number of $100 million valued companies, right? So that's an opportunity we are tapping on, right? But there will always be the funds that will target the power law model because there will always be the next wave of unicorns that will come out, which is great.
But if you have a $100 million fund, you can, it's difficult. You probably need
Very
to,
difficult.
right? It's quite difficult to run a micro PE strategy without a very different mindset of operating, right? Because you have to put so much more money to work. So.
And I think the tricky part is that therefore all the things have to work, which is, I think, obviously company and founders. Many of them actually want to build good businesses, and on the way to a $100 million revenue company, they need to get to 50 million, 10 million. So I think actually almost every founder will have that opportunity to make a decision to say, hey, I'm going to be more of a moderate growth company than trying to go for a VC type growth curve. So I think every founder kind of will have that multiple opportunities to choose. But I think it's really about the reconfiguration of VC funds to do so. I think the first ones that we saw obviously were, I think the VC funds that were more linked to family offices in Asia. Then because of their LP mandate and that the LPs were okay with a lower rate of return for a more guaranteed return, right? I think they were the first to really start switching away from home run VC US type to more of that openness to private equity or kind of like consumer brands,
brick and mortar
businesses.
I was going to say brick and mortar.
So they were the first to do so. But I think the VC funds that had more like US type LPs that were focused on that VC type return equivalent to the US, I think those funds had basically had a more difficult time talking to LP base, saying, this is what we promised to you 5 years ago, and this is what we're seeing right now, and how do you square that circle? That's a very difficult conversation. Yeah.
And how do you see that? What's happening in reality? Like, are these funds raising subsequent funds? Are they funds? We don't need to name names, but more as a sort of theme, as a trend. Are the bigger funds able to raise their subsequent funding rounds? Are they delaying them?
Actually, there are a few things happening. One is that some of them are switching to private credit, right? Looking at credit-based deals instead of just pure venture type deals in different shapes and forms around different stages, right?
And using the existing funds capital,
yes, and then
changing the mandate,
and they're doing this with existing portfolio because they have a familiarity with the company, they understand their financials better, and the trust has been built. The second thing that some funds are doing, that I'm an early stage investor in some of the companies, is whereby the funds are going back to these companies that they invested in, restructuring their portfolio, putting in some more additional capital, but ensuring that the investors have a larger role to play or take a larger chunk of equity and doing some level of restructuring on the cap table level, right? So this also means, returning some capital, although not that much significantly, to earlier investors, just to make sure there's enough equity on the table for everyone to benefit.
Yeah, I mean, I think it's going to be interesting for all founders, all VCs, and all operators to really reset and what that means. I think some key takeaways for people are going to be, one is making sure you have the right fund size to be able to match that to the right outcomes you believe for the region. So there'll be smaller funds on average moving forward. Two, I think there'll be a wave of emerging managers because, they are going to build those new funds. So the fourth, while existing VC GPs will continue to harvest or nurture their existing portfolios to whatever the outcome is to be. And then thirdly, of course, is I think founders are starting to reset, whether that's going to be saying, hey, maybe it's not so bad to be a fractional CTO somewhere in the meantime while I have my kids, and earn cash, for example, to figure out new approaches like search funds and roll-ups. I think there's going to be a whole stack. And I think on the other side, you also see employees also kind of like do a reset, which is that they're much more, thoughtful about what kind of company they're walking into, the risk curve. I think, 2021, 2022, everyone's like, let's join a startup no matter what. And ESOP, employee options are employee options and it's going to make me a millionaire. And now I think people are starting to get a lot more sophisticated to be like, okay, this is the risk.
I prefer some salary.
Yeah, cash is good. It's like you can't, get a mortgage with stock options, unfortunately, right?
Yeah.
Look, I mean, if you saw what Block just did, most people are just happy making sure they have a job that is not going to be gone in the next few months, right? Even though they put in effort in with all the layoff stuff. I mean, the Block laid off 40% of their company. And the memo was that even though people were actually using AI, they still got laid off, right?
Right.
And it was just a function of like, look, we just don't need that many people, regardless of how productive you are. And I think that wave is 100% going to come to this part of the world at some point, although we are cushioned by low salaries.
Yeah, we're cushioned by lower labor costs.
Correct.
So that's a benefit. I mean, especially Indonesia, Philippines, Malaysia, etc. A lot of BPO in the Philippines.
Not fully. I mean, I've talked to my friends in the banks, and if you talk to their, kind of like IT teams, the way they're showing up won't be in terms of layoffs, but it will show up as, hey, we're putting in $1 billion of capital expenditure of investments. And then the number of jobs is actually a fraction of what historically it would have been as a ratio to capital, right? And so, it's a nicer version of what America is going through, which is layoffs of very expensive American labor. But to some extent, what you're seeing in Singapore is the job growth, even though they're investing a lot of capital into IT, the job growth is much smaller. And so very pleasant, doesn't go in the news, everybody doesn't look at it, but once you take and look at that ratio, then what you kind of realize is that for the new workforce that's coming up, like your Gen Z folks, then there's just less jobs.
All the entry-level guys, yeah.
And does it hurt? I mean, this is like this K-shaped economy thing. I'm sure you've heard about it, read about it. Do you think does it affect the sort of, I mean, here we are all hoping for a rising middle class, right? Like we've seen in China, India, and I think there's been some progress, but also some not so progress. I think in Indonesia, some numbers were published. Do you think that's going to get worse here? Or what's your sense on from what you see macroeconomically speaking?
I think it's
Jeremy,
difficult.
you're the man. You understand the stuff.
Yeah, Jeremy's a macro guy.
I'm a macro guy. My shit, I'm the macro guy.
He's the macro guy.
And you're the micro guy. This is... I'm
the guy who's late.
I think when we talk about a K-shaped economy, there's, I think, a common article which is talking about the change of wealth and income inequality for the upper class and the lower class in developed economies, right? So I think a lot of these articles are like Substacks about America primarily, and to some extent, Europe. I think what's interesting is that Southeast Asia is a little different because we are still on the labor side. If you look at Southeast Asia, like Indonesia, Vietnam, there's still both a domestic economy that wants to grow. People want more air conditioning, better food, and want to have a better life, right? And so there's still a domestic economy that's still pulling people up from into the middle class. But also there's still
and business owners, I mean, also because of GPU costs and sorry to interrupt, because of GPU costs and relatively speaking lower labor costs, even at the kind of white collar level, let's say in banks and in industry, in telecommunications, sort of where you have the bigger companies, a lot of them family owned. Will they have an incentive? Because it's really about the incentive, isn't it? So will they have an incentive to really enact mass layoffs at the kind of larger scale industrial and government owned corporation level to really create these big job losses? Like, can AI and GPU, LPU, TPU, can it actually really solve things cheaper than an army of people? I think that's big question, right? And
But it's a very different issue in a market like Philippines versus a market like Singapore, right?
right.
In a market like Singapore, where primarily is white collar kind of work, if you look at what AI has done for the legal sector in the last few months, the same issue is going to start hitting the overall finance sector, the medical sector, and all, right? So the displacement of workers in high level white collar jobs is going to be a much more painful impact than in a market like the Philippines. Philippines has, let's say, a significant amount of opportunities and work to be done in infrastructure, in travel. So some level of workforce movement and redistribution in other sectors is still okay. But in a market like Singapore, I think that's going to be very, very difficult. If suddenly you see a whole bunch of doctors not having work to do, how do they keep themselves busy and occupied, right? And I think that's the shift that we haven't fully figured out. That I think the government was trying to put in some effort in the whole all the AI programs that they're launching. But that shift is the one that's going to be most complicated. So on some level, maybe they will start to shift their work-life balance where half the time they work and the other half the time they do other social-centric work. So that could help with things like the aging population issue. That could help with social welfare issue, education issue, which are actually big gaps in the Singapore side that they don't have a lot of support on. The other areas would be just simple restructuring and re-understanding of what white collar work actually means, and maybe more interest on the blue collar side. You have a lot of the Gen Zs now looking at doing repairing businesses, doing aircon businesses. So it could be that the blue collar workforce in Singapore that is primarily dominated by people from Bangladesh, India, and
other
all
countries
could actually shrink and be driven by younger, more able-bodied Singaporean or local chaps to take over that whole space. So I think there's really going to be a redistribution and reworking of the work idea of work in this country, and it's going to be radically different from Singapore as compared to Philippines, as compared to Indonesia.
Makes sense.
Yeah. Basically, I don't think there'll be a K-shaped piece for Southeast Asia. I think K-shaped definitely applies for the developed Western world, where middle class jobs are getting attacked by both AI and offshoring.
Yeah.
But if you think about it, is in Southeast Asia, AI is not going to eat a job because labor cost is low, and there's a domestic economy that's very physical.
AI is not so cheap.
And they're pulling the job from the US still, right? Even today, no matter what, the iPhones and AirPods, even though they move from China, they move to India, right? So it's not, the net job creation is still there, and China is still going and making other things with that time, which is dancing robots and even more driverless cars and helicopters, right? So
military robots.
Yeah, exactly. So I think I wouldn't say there's a K-shape, and I think for the Singapore and within Southeast Asia, I think the tricky part is the dislocation effect, right? Which is people have to reset. But, I think Singapore is a manageable problem in the sense that, it's 5 million, residents, etc. There are enough jobs for everybody, like you said, including blue collar. Associations can work in the region. They can move and work as, kind of like rotational.
Plus remote work
associates, remote work. So I think it's still going to be painful for individuals. And I think the government still needs to take the lead on pushing it. I'm just saying that it'll be more worrying if I was like in Midwest America watching still the hollowing out effect happening. Then I think it's much more trickier.
I can see that. It would be more like a wriggle line economy than a K-shaped economy.
Yeah, wriggle. Yeah, exactly. It's like you've got to crawl our way, leopard crawl our way. Isn't it like the German chancellor was like, was on a speech saying like, Germans need to work harder because he came back from China.
He did say, oh yeah.
Yeah, exactly. Yeah.
He's probably quite right. But I'm a pretty hardworking
Europe in general,
German.
Right? If you think about it. Yeah. No, but the other thing is there are also sectors, right, currently like in Singapore that are desperate in need for talent, very underserved, like the cybersecurity sector, right? They've been struggling to get a good amount of companies, interest, capital in. And I think, AI will help make that reduce that problem, essentially.
Right.
The other massive opportunity, if you think about it, is in regulation. So I think at some point, governments will also want to regulate how much of AI is going to be involved in what sectors and what industry.
And it goes into like Dario's conversation with the government.
And then the bigger problem is not just AI, but it's the robotics and the manufacturing side, which is still a very big chunk of Southeast Asia's value.
And Singapore probably has a role of sort of leading that discussion regionally.
They started with the white paper on agentic AI first, right? I think they've just started some blueprint work. But if you look at, let's say, Vietnam manufactures a lot of the world's sports equipments. On running shoes and all these Nike shoes and all that, right? If they start allowing all these companies to start throwing in robots inside, I think there will be an uprising. And that's where, again, regulation will come in to say, hey, look, a factory can only have a certain amount of AI and automated and human balances, right?
Right.
Kind of like how Singapore's HDB has a certain amount of races so that, you have a good amount of mingling, right? So the concept of intermingling between humans and robots is going to be regulated.
It's another race
level.
joining us.
I mean, I was in SF in January and it was quite like, science fiction, right? Because, this is something theory in science fiction called future shock, which is when
way more.
Basically the future arrives so fast that people are just shocked and they cannot react. And the reason why I felt like that was because I walk into this Waymo and I'm carrying my Costco rotisserie chicken and I'm walking by into this Waymo, no driver. You put my Costco chicken on a driver's seat and then you start driving and then you pull up to this junction. And on the left is an Uber driver. On the right is a Lyft driver, right? And you're just chilling, in the front seat in this driverless car. And then on the opposite side of the windshield, there's like several homeless people who have no jobs. And it's kind of crazy because what you're thinking to yourself is like, wow, like this, driver should have been a job, right?
Yeah.
But it's no longer a job, right?
Yeah.
It's the same price as the Uber Lyft. And the
It's
only thing that's constraining,
quite a daunting image.
Yeah.
Did they look at you? Did they give you threatening looks?
Yeah, I mean, the guy eyeballed me and I was like, happily listening to my classical music, very loud, this thing. And if you think about it, is like what's constraining Waymo from taking all three cars, right? Nothing, right? It's just a matter of scaling. And so what's going to happen is the Uber job is going to be gone, the Lyft job is going to be gone. And so how is the government going to prevent them from joining the homeless side with no job on the other side of the road, or reskill them to something else? And I think that's really, the crux of it, which is kind of weird because all the AI people bros are like, this is a real problem. But it's something that, it's hard to even believe. Yeah.
Yeah. I mean, maybe changing topic a little bit, but coming back to that kind of labor side of the equation in our context, in the venture capital context, what would your recommendation be to founders on what to pay attention to? Or you said, what do you think founders should focus on these days building here? And maybe just a few sort of thoughts that I've been having in this context. I think there is an opportunity now with application layer and potentially software and hardware actually to produce AI-driven or enabled applications that are that can really become global companies. I think there's there's potentially a high level of trust in fully automated hardware solutions that come from Singapore, or Australia, and we know this. We know this from Atlassian and Xero that Australia and New Zealand has a history of producing very very successful global SaaS solutions, and so sort of in that context, I wonder if with globalization. And sort of the proliferation of the access to technology, you have new opportunities really on one hand, right? So you can, you not necessarily, of course you have talent density in Silicon Valley and these kind of things, and that will, OpenAI and Anthropic and XAI, as part of SpaceX, obviously all American built. But then you have things like Higgs field coming out of Kazakhstan, right? And that's really a global business. It's a completely random factor that it just happened to be born in Kazakhstan. It could have been born anywhere, right? The technology could have been built anywhere. And I sort of feel like that's one thing that founders can consider, that now it's with AI, it is actually less important where you are if you're building really well. So you can build global businesses theoretically, especially in a software application layer, which obviously with things like Grab and Gojek, Uber never really made it here because they were built locally, right? So they built local businesses. Or Lazada became very successful here. So I think AI sort of creates these business model opportunities, and we probably don't even know the half of it yet of all the things that will come, that you can build for a global audience. You can build tools for a global audience, and you just happen to be here. So that's, on one hand, that's I guess something to think about for founders. And another thing is using the rise of AI and the tools that are available now to build more efficiently for the Southeast Asian market, right? Not necessarily just displacing humans, but just building tools that are building more, let's say, profitably, from day one, because you can sort of start with a much lower cost. Talking about people using Claude code, right, for building applications without a 10 people development team. I'd love to hear your thoughts on that. So how do you think about it for founders, and what do you see, Mohan? You see a lot of startups. I'm sure you do too. You interview a lot of people. Yeah. Jeremy from the founder community. What do you guys think?
So I think the complexity now, right, is that moat building has become way more difficult, right? So you can build a moat really fast, but you can lose that moat as fast as well, right? The moment Claude launches a new feature, bang, that moat is gone. So I think at least for Southeast Asia founders, I think their proximity in Southeast Asia has, for the first time in a long time, became an asset, not a liability, right? Because there are some very unique sectors and very, very unique problems that are relevant in this area. Agriculture is a huge opportunity in this market. Like just things like rice farming, palm oil, those kind of things, right? Yeah. There are sub-verticals within agriculture that startups can look at that are problems that maybe might exist in some other parts of the world, but are very, very unique to this part of the world. And you won't have a Claude or American company solving for that problem, right? So moat building is going to be difficult, but when you get that moat, it will stay. I think that's one big consideration.
Just to be very clear, so looking at very localized industries,
correct,
that the big US players aren't going to build for.
In any startup, right, you got to build your moat, right? And in the past, moat building was either through data or community. And in AI, moat building conceptually is you build that moat really fast, but you lose it really fast as well if you're doing something global and generic. But the Southeast Asia opportunity allows you to build a moat very, very deeply in some specific verticals. Agri, waste management, those are some of the areas that I think you can really put AI to good use. And those are the opportunities I think Southeast Asia founders should look at paying attention to. Because if you don't, then you can be a great company today, but you can completely lose that business in 6 months.
Yeah, that inspires, a contrarian thought of mine, which is that there historically was a Asia to US corridor, right? Like trying to sell software as a service to US customers using Asian engineering talent and so on and so forth. And part of it was also because the concept was that engineering was cheaper to do in Asia. But if you think about it, is that now an American founder who understands the American customer very well can now code it much faster and have marketing agents that are much cheaper than somebody based in Vietnam or India or Singapore. And so they can themselves actually build their own software stack, right? And so I wondered to myself, as a hypothesis, whether it means that the historical corridor of Asian founders traveling to America to try to sell to US customers software as a service, whether that's something to get eaten up by lots of, Native American founders using AI services to code everything.
Makes sense. And do you think building global businesses from Southeast Asia is possible? Or more or less so than it was before? I mean, there aren't a lot of great examples. There's a few, of course.
I think there's great ways to build, global businesses. It's just that you have to understand why build them from, Southeast Asia rather than somewhere else, right? I mean, for me, I talk and host the Brave Southeast Asia Tech Podcast because I talk about Southeast Asia, but I'm not going to talk about American technology from Southeast Asia. That'd be a crazy thing to do because I'm not there, right? And so I think we have to kind of like stop reading New York Times and Wall Street Journal and talk about the mind's eye, the Midwestern customer, and to say, what is that thing that says we have the right to win to build it from Malaysia or Vietnam, etc. Like, I would love to see more durian companies, for example, right? The king of fruit, right? Yeah. Like no other countries in the world can really do durian. It's only Malaysia, Vietnam, and barely China now.
Christopher is doing something like that, right? So using some freeze-drying tech for durian transportation.
Exactly, right? So you could make a global durian company servicing the whole world, make it the hottest food. I mean, people, in America, they were going crazy over, sriracha chili, which was basically just Vietnamese bird's eye peppers, right?
Chili sugar water.
Yeah, chili sugar water, right? So they made a global, chili sauce company. Brand. I'm just saying like, I think founders just have to say like, what gives me the right to win, right? Because if not, then could you move to America then? I mean, that's a flight ticket away. But if you want to build from Southeast Asia, then why? What makes Southeast Asia not just a home, but also an asset?
Yeah, I strongly believe that, and I still do, that you can build global companies from Southeast Asia, right? It's just a function of which verticals do you want to target. and where the expertise are. I mean, if you look at Malaysia, right, a lot of Web3 companies well used globally, all built from like Penang or KL, right, and also with very small teams. The asset that Southeast Asia has in areas like food. We look at Jollibee, right? Jollibee is a global brand now. And not just Jollibee, the brand, but the group, the amount of assets they own under them, phenomenal. To some extent, I think Southeast Asia has been distracted by the fun, shiny things that are happening in the US. And I think that's what has been wrong in the last 15 years of venture, right? But if you look at the next 15 years, if you want to specifically build in AI, the truth is, I think going where the talent density is, which is Silicon Valley right now, and the capital density to scale really quickly, the truth is, I think you're better off being in the US, right? But if there are still certain verticals, like I believe in food and consumer, that actually Southeast Asia can be a really powerful global opportunity.
Makes sense. Well, okay, I think we're getting towards the end of this before we get kicked out here. One last section that we started to do here is kind of quick fire, biggest win, biggest fail in the VC ecosystem, I guess, or a broader world, if you will. What have you seen sort of last month that you thought were your biggest wins and fails in VC?
Biggest wins and fails in VC.
I think the biggest win so far in the ecosystem is finally starting to prosecute founders who commit fraud, right? Starting to investigate them and to say, look, we have this set of evidence. We are going to bring this to court. And then you have a defense lawyer, we have a prosecution, and let's see where the facts are, right? But, it's a fact of the matter is that, integrity is important for the entire ecosystem. Otherwise, everybody has to eat a risk premium. And I think that government stepping in to protect the rights of employees, investors, and people who are doing the right thing benefits the whole ecosystem.
Completely agree. And what's a fail? People committing fraud.
Stop committing fraud.
That's a good one. How are the trials? Have you seen some of the trials? How are they going in Indonesia? Or which was are you referring to?
I think there's a few of them that are going on, right? So I think people are being pulled in for questioning, etc. I think that's one piece. I think we're also starting to see investigative cases being opened up by the Singapore courts as well, to protect Singapore investors as well. And I think that's good for Singapore, right? Because, the whole point of it is you choose Singapore, like Delaware, to have good incorporation, good rule of law. And when the law is broken, then there should be appropriate consequences for people who break the law.
Yeah, makes total sense.
Otherwise, what's the point of the law then? If it's totally toothless. If the crime happens in a separate country, then you're like, wait, no, why you incorporated in Singapore? So I think that's something for people to be thoughtful about.
Makes sense.
I think one big win I see is the fact that the VCs are evolving their models, right? The fact that they're trying out different types of investment, private credit being one of them, the fact that they're looking at brick and mortar businesses, they're changing their investment thesis. I think that's a positive change, right? At least there's some level of tweaking, innovation in the venture space, which I think is very much wanted. The big loss, right, or negative, I think, is the fact that people are starting to give up on Southeast Asia. I think the region still has a lot of potential. Yes, it has a lot of problems. Yes, a lot of the regions have not, come up with any meaningful enough outcomes, right? But I think the venture community and the startup community is still nascent. It's still extremely young, and I don't think we should give up on it too quickly or be too critical on the issues. Because the truth is, a lot of the issues that exist in this region really do also exist in a lot of tier one ecosystems in the world.
Makes sense. Yeah, I'll throw in slightly the other way around. My biggest fail, I think, is that there isn't enough AI infrastructure businesses being built out here. And I can call out some of our portfolio companies across our broader universe. One is Belani, which I think is doing a great job building cloud-based inference and GPU services for the local ecosystem. And I think that's really important because, as some of the data has shown, Moonshot, Kimi K2 is sort of delivering the results at 50% of the cost as ChatGPT or OpenAI, and I think we need to build infrastructure that's specifically served to a lower GDP per capita audience and can deliver sort of good results at efficient costs. And I think there's not enough going on at all in that space yet, and I'm hoping there's more, and we'll give you money if you build that. Biggest win, call out to Yiping from Formers AI, also something we are proud new investors in. Building the Canva of architecture. That's pretty cool out of Singapore.
Yeah,
hopefully
that's a good one.
Hopefully they go very far.
Impressive.
Yeah.
Yep.
On that note, let's call it a day.
Yeah. Thanks for joining us for the 6th episode of The Accidental VC. I'll see you again next time. Thanks for joining.